us is Dr. Ananthanarayanan, the MD and CEO at Strides Pharma. Thank you so much for joining us live right here. First up, your first take as far as the report card goes for the quarter that is under review and what the markets will want to know. We've seen EBITDA, for example, the declaration that has come in, a break even also. Things will improve going forward?
Good morning, and thank you for having me on your show. Absolutely. I think this quarter has clearly seen us coming back after muted last two quarters. Particularly, we had 2 quarters of revenue degrowth, particularly in the US market in Q1 and Q2, resulting from pricing pressures. However, in this quarter, we've come back with growth on all of our businesses. So every one of our business on a quarter-on-quarter has shown growth. US has shown a growth of 13%. The other egg markets has reached its historical peak and grown at 6%. Our emerging business has also shown a growth as well. So that's a very positive sign from our perspective. I think we still continue to feel the gross margin pressure. However, what's interesting and important to note is that going forward into Q4 and beyond, this growth will start us getting back into the growth trajectory that we wanted to be. And we continue to remain optimistic and committed to the US growth in FY23 as per our guided level of about $250 million.
That's right. For the new financial year, I do see that there is a guidance that has been given of $250 million at a time when there is pricing pressure there, and at a time when you're also talking about new product launches. Can you, put all of this together for our viewers, because the comeback of the American market is going to be quite crucial.
Absolutely. And as you know, we announced during the last quarter that we were going through the acquisition of a facility in the US at Chestnut Ridge from Endo Pharmaceuticals. During the Q3, we completed that acquisition and the integration process is on. Although we were able to only recognize the revenues in Q3 for a very small period of a number of days, that's going to come out fully in Q4. And beginning Q1, we will have launches coming in, almost 5 to 6 new product launches every quarter, beginning FY23. And that's really our growth plan. And that's going to be the key good driver for us going forward in the US. Also, we successfully, just on the 8th of February, incidentally had a FDA inspection at that site, post our acquisition, and we've gone through a successful FDA inspection with only 2 minor observations. So all of those signs, all of the elements of launching new products in place, and that's really going to be our key good driver for the next year going into that.
Right. So if you could just talk to us about the pricing pressure in the US. Some managements are indicating that, it's a rock bottom, rock solid, steep pricing erosion that one has seen. But some managements are saying it's always a phenomena and we'll make up to new launches, make up the growth with new launches. We've done it for years and nothing has changed. What will be your perspective?
So our perspective, again, our commentary started way back in Q1. And it also depends upon company to company and the portfolios that they have. Our portfolio prior to the acquisition of Chestnut Ridge was a significantly acute focused portfolio. And with the COVID hitting in, a lot of COVID acute portfolio got impacted because people were indoors, not really going out. There was no flu season, all of that coming in an impact. And there was a lot of channel inventory that was existing on the acute portfolio, which caused the price drop and the price erosion. As we see it today, we believe that the price erosion for us has come to a final steady state. We do not see that likely to go further down. And therefore, anything forward from here now with the revenue growth coming in is all going to be able to help add us towards our gross margin. And with the control that we have put in on our cost measures, will start giving us operating leverage as well.
Just explain that operating leverage for a bit, as the sales start to grow, high margin product starts to come in, how suddenly the margin picture can change in just 1 quarter for any decent sized pharma company?
Yeah, so it can't change in 1 quarter. You're absolutely right. And we've seen that, therefore, an impact for us as well over the last 2 quarters. But a couple of things that's changed, right? One is we did have with us some of the inventories of high cost raw materials where prices had gone up We've had the utilization of all that inventory going through. That's number one. And number two is, as we reported during our last commentary, we had a significant cost coming in from the logistics cost. We've now moved most of our shipments to sea shipments, and also have had long-term contracts, and the cost of logistics has started coming down. In this quarter, we've reported a significant reduction in our logistics cost as well. So a combination of both of those will start turning us and delivering. Will we see a significant change completely in Q4? No, but the direction in Q4 will show that the operating leverage will start, and getting into Q1, we'll start certainly seeing the positive impact.
Okay, I just wanted to understand as well what the outlook is, because we have seen other regulated markets and newer markets as well that have seen steady numbers over the last 9 to 12 month period. Give us a sense as to what the outlook is and what has driven that growth and how you see things shaping up on that front.
Yeah, certainly. So unlike the US, the other reg market is not going through the same kind of pressures that the US has. The pressure was a bit different in the other reg market. It was particularly COVID-related impact where prescriptions had gone down. And that was one of the major challenges. Having said that, over the last 2 quarters, you would have seen us continuing to grow on the quarter-on-quarter on the other reg markets. We've now reached our historical peak of $40 million, which we believe now is where the base is reset. And from here on, we're expecting to see the growth continuing from the $40 million upwards. The reason for confidence, we see the visibility of very good order book. So order book in place. We do not have any manufacturing disruptions. There's a lot of supply-based performance there. And the market in the UK is now continuing to pick up as well, post all the Omicron related impact now being behind our back. The numbers are starting to show back. Prescriptions are getting to be picked up. So other reg market will continue its growth momentum, and the $40 million will probably be our new base as we go forward.
And when do you expect to start the commercial supplies of Sputnik Light? What is the kind of volume you're expecting here? And do you think that the vaccine opportunities are still looking strong, or that the best of this opportunity is now behind us?
So as far as the Sputnik Light is concerned, we've been pretty successful in validating and scaling up the product up to the 2,000 liter scale. One of the few organizations that have been able to do that, number one. Second, we've received the NOC for export from the government for about 50 million doses. And we are expecting and hoping that we should be able to do the launch in Q4 of this financial year. As regards to the vaccine opportunity, that is certainly a challenge. The vaccine opportunity probably doesn't look as it was with a large number quantities available now from what it was in the past. But the challenge and the opportunity really exist as booster vaccines. And now with the government giving the emergency use approval for Sputnik Light, potentially there could be opportunities for being considered as a booster vaccine.
About the various other markets that you operate in. So for the last 2 decades it's all been about US, how margins go into US, how US is a very high pricing market. But in the post-COVID world, we've seen even other markets doing quite well. Can you just talk to us about the opportunity, say in UK, in some of the other regulated market, because historically the company has operated in various other markets versus some of the other companies?
Yeah. I think in addition to the US, the other reg market, particularly UK, Germany, Austria, Switzerland, Australia, South Africa are all key markets for us. And we call that segment as the regulated market part. And the regulated market cumulatively has grown 9% in this quarter. Now, as you rightly said, these are markets that are going to be extremely important for us. We see continued growth coming in there. We are doing portfolio leverage. So products that have been filed in the US as well as in some of the other regions, we do portfolio maximization. The whole growth driver for us is continued new product launches in these markets. And now with the Omicron and the COVID issues settling down quite a bit in these markets, prescriptions are picking up. Our partnered business in these markets are continuing to really start growing up. So this will be focus areas for us. And as I mentioned, the $40 million that we reached on the historical peak, we would say now has become the base for us. And you'll start seeing growth beyond this as we get into Q4 and then into Q1 and the full financial year in FY23.
Thank you so much for taking out time for us. Good to get perspective from you. Hope to speak to you once again after the next quarter.